The Shiba Inu ecosystem has witnessed a staggering historic spike in its token burn rate, fueled by a hidden mechanism within the Shibarium Layer 2 network. This dramatic deflationary action is ripping tokens out of the circulating supply at a record pace, signaling a major turning point in the token's core tokenomics this November 2025. But what am I even talking about? Well, let me explain. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. This report focuses exclusively on the Shiba Inu burn mechanism and its performance as of November 13, 2025, using real-time data from the community-run tracking platform, Shibburn. Token burning, the permanent removal of tokens from circulation by sending them to an inaccessible dead wallet, is the single most important long-term strategy designed to reduce Shiba Inu's colossal initial supply and induce scarcity, thereby supporting price appreciation. With Shiba Inu currently trading around 917 units, a market cap of over $5.3 billion, and a 24-hour trading volume of approximately $165 million, the success of the burn mechanism is paramount for investor confidence. The key driver of current burn activity is the Shibarium Layer 2 network, where a portion of the gas fees generated from transactions is automatically allocated to purchasing and burning SHIB tokens. The current focus is on whether this sudden surge in the burn rate can be sustained, and if it can finally translate into a meaningful long-term impact on the token's price trajectory. The Shiba Inu burn rate has experienced an astonishing and abrupt increase, with a staggering 3,651.09% spike in the last 24 hours, according to data from Shibburn. This sudden acceleration resulted in the permanent removal of approximately 179.6 million SHIB tokens from the circulating supply in a single day. The weekly burn data is even more compelling, showing a total of 823.4 million SHIB tokens incinerated over the last 7 days, which marks an increase of over 2,639% compared to the preceding period. Sources suggest this monumental increase is not due to a single, anonymous whale burn, but rather a sharp, programmatic increase in the frequency and volume of burns executed directly from the Shibarium network's accumulated gas fees. This change indicates that the automated deflationary mechanism, where 70% of base transaction fees are dedicated to burning SHIB, is finally seeing a major optimization in its execution schedule, effectively turning the Layer 2 solution into a highly efficient token sink. This mass eradication of tokens has reduced the total circulating supply to approximately 589.24 trillion SHIB. Despite the monumental spike in the burn rate, the immediate market reaction has been relatively subdued, highlighting the prevailing weakness of broader crypto sentiment. Shiba Inu's price action remains range-bound, currently trading at 957 units and posting a marginal drop of approximately 0.96% over the last 24 hours. The price continues to trade below its key daily moving averages, 50-day and 200-day, signaling that the bearish technical indicators still dominate the short-term outlook. However, the high burn rate has successfully prevented a more significant price decline, acting as a crucial underlying support. Analysts note that the market is beginning to price in the long-term deflationary narrative. While the price has not yet broken resistance, the massive burn data has provided a bullish narrative shield against the recent volume collapse, which saw trading activity hit multi-month lows. The increased social volume and community discussion surrounding the burn rate suggest that this tokenomics event is building a necessary foundation for future price pumps, even if the immediate effect is delayed. The on-chain evidence clearly corroborates the reported surge in burning activity, showing a massive transfer of tokens to dead wallets, as tracked by block explorers. From a technical analysis perspective, the token burn is acting as a fundamental counterbalance to the current volume collapse. While the Relative Strength Index (RSI) remains neutral at around 46, reflecting the flat price action, the successful automated burning via Shibarium is a critical factor for long-term tokenomics. As per on-chain data, the total amount of SHIB removed from the initial supply has now surpassed 410 trillion tokens. For the first time, the continuous nature of Shibarium's transaction fee-driven burn mechanism is showing the kind of scalable deflationary pressure required to move the needle. Crucially, the increase in burns coincides with a rise in the average size of transactions on the Shibarium network, sources suggest, indicating that the Layer 2 is attracting higher value activity from decentralized applications, which directly translates to more bone tokens converted into SHIB and burned. The massive automated burn spike has profound implications. Analysts believe that the success of the Shibarium burn mechanism is the single most important factor for Shiba Inu to achieve its long-term price targets. The current burn rate, if sustained and increased, signifies that the ecosystem is successfully transitioning from manual, speculative burns often executed by large wallets or community donation events to systematic utility-driven deflation. This shift provides long-term predictability to the tokenomics. Expert commentary emphasizes that while the burn rate percentage seems astronomical, the sheer scale of the total circulating supply, 589 trillion, means that sustained burns of billions or even trillions of tokens per month are necessary to materially impact the token's valuation in the short term. However, the current momentum proves that the engineering behind Shibarium is sound. The implication is clear. Every successful dApp launch, every new partnership, and every increase in Shibarium's transaction volume now directly and automatically contributes to the deflationary efforts, slowly but surely creating scarcity that could lead to exponential price growth during the next major market upswing. The SHIB army has met the burn rate surge with ecstatic celebrations, reigniting the popular social media narrative of erasing zeros. Community trackers show that Shibarium burn is a top trending topic on X and various crypto forums, boosting overall investor sentiment. The community views this as the ultimate proof of the Shibarium network's utility. The development team has been more measured, continuing their focus on execution over price hype. Kusama, the pseudonymous lead developer, has consistently framed the burn mechanism as a natural output of the ecosystem's utility. Developer hints suggest that the recent optimization was a planned late-stage implementation of the Shibarium code, designed to make the burn process more efficient and frequent as transaction volume scaled up. The core message from the team remains: the burns will follow the utility. This means the community can expect future burn spikes to be directly correlated with adoption and usage of the Shibarium network, including the recently announced telecom integrations and other major projects scheduled for early 2026. Short term, 1 week, 1 month. The immediate forecast revolves around maintaining the current aggressive burn rate. Analysts believe that if the daily burn rate remains in the hundreds of millions for the next week, it could catalyze a psychological shift in the market, encouraging retail investors to buy back in. The next major technical target is for Shiba Inu to break above the 1010 units resistance level. The crucial factor to watch is the daily transaction count on Shibarium. If this count increases alongside the burn rate, it indicates sustainable utility growth, which is highly bullish. Long-term, 3 months, 3 years. The long-term price potential for Shiba Inu is now more tethered than ever to the automated burn mechanism. The project needs to maintain an average monthly burn rate in the trillions of tokens for the supply to decrease at a rate that warrants removing a full zero from the price, for example, reaching 1,000,000 units. The key long-term catalyst is the full adoption of Shibarium by major DeFi protocols and corporate partners, ensuring a constant high volume of transactions and fees. The long-term outlook remains speculative, but shows increasingly strong fundamental support, provided the development team continues to prioritize and successfully execute the deflationary goals tied to their Layer 2 solution. While the massive burn rate surge is highly encouraging, a balanced opinion requires acknowledging the limitations. The biggest red flag is the persistent market apathy. The burn spike did not cause a major price pump, proving that high-volume trading and market demand still override supply reduction in the short term. Neutral insights suggest that investors must look at the absolute number of tokens burned, around 179 million in 24 hours, relative to the circulating supply, 589 trillion. While the percentage increase is dramatic, the net impact on the total supply remains small for now. Furthermore, a failure by the development team to consistently scale up the adoption and transaction volume of Shibarium could see the burn rate revert to lower, less impactful levels, undermining the current wave of optimism. The current price structure is fragile and remains highly vulnerable to bearish moves in the overall crypto market, overriding the positive tokenomics news. So the Shiba Inu ecosystem has finally activated its heavy artillery, with the Shibarium engine now systematically incinerating tokens at a 3,651% higher rate, fundamentally reshaping its long-term deflationary future this November. The data proves that the utility-driven burns are real and are accelerating, providing the necessary supply shock to counteract the token's massive supply. The crucial challenge now is transforming this powerful tokenomics event into sustained market demand, allowing Shiba Inu to finally break free of its key resistance levels. The Shib army is celebrating, but only continued. Massive transaction volume on Shibarium will ensure this fiery momentum pays off with a price breakthrough. The day is over now. Remember to give it a big thumbs up to see our most recent material, share it, and subscribe to the channel.